Is the Fed about to cut interest rates? And what does that mean for your wallet, for your money? All right, picture this. It's 1979. You're driving your Pontiac Trans Am because you've just seen Smokey and the Bandit. Or is it Smokey and the Bandit 2 in 79? Well, I don't know. My Sharona's blaring on the radio at the roller rink. And mortgage rates are so sky high, you'd think they were set by the Houston Rockets, or maybe NASA. Or you probably didn't pay attention to mortgage rates back then. Your parents did. All right, so we're going to flash forward to today. Interest rates may not be in double digits, but after being relatively high, the Federal Reserve is signaling it's ready to cut rates as soon as September. Earth, Wind, and Fire, right? Where are these musical references coming from? I don't know. We'll stick with it though. All right, let's break down what's happening, why it's happening, and how this could impact your day-to-day finances right here, right now in 2025. So why is the Fed cutting interest rates, or at least looking to? Jerome Powell, the Fed chairman, he's the band leader, but for the economy, for the Fed. He just gave his big speech in Jackson Hole, Wyoming. By the way, an amazing place to go skiing and go to the $1 Million Cowboy Bar, right? You've been there? You sit on saddles at the bar. All right, it's a place so famous even the 80s Wall Street movies referenced it. We're talking about Jackson Hole. He said with the labor market cooling off and inflation not running as hot as Van Halen in '84, it may warrant easing up on rates. What does that mean? What's the translation? Well, the Fed's worried folks aren't getting hired as quickly. Paychecks aren't stretching as far, and it's harder for everyone, especially retirees, to keep up. For months, the job market was pretty steady, right? But now, job growth is slowing. Unemployment, well, it's stuck around 4.2%. And companies are acting more like your uncle during disco, staying alive, sitting out the last few songs. Well, in this case, they're not hiring workers or hiring fewer workers. So Powell and company are eyeing a likely rate cut at their September 16th and 17th meeting. And Wall Street is betting 85, 90% that it will happen. So what does a rate cut really mean for you and for your money, for your wallet? All right, we're going to try to cut out these music references, but we're going to talk numbers. Borrowing gets cheaper. A cut means lower rates on mortgages, home equity loans, and maybe even those ever pesky credit cards, up around 20 or 22%. If you're looking to downsize, refi, or finally put in that avocado green kitchen, you might pay less in interest rates, in interest soon. How about payouts on savings accounts? Well, those could go down as well. That's the downside. Interest on CDs, high-yield savings accounts, and money market funds might drop. If you love seeing that interest earned line on your monthly statement, be prepared for it to look more like the gas price digits during the energy crisis. Shrinking, not growing. Stock market though, some shenanigans on Wall Street. Historically, stocks usually get a little party when the Fed cuts rates. Investors see it as a sign of easy money on the street. Easy to borrow money. But if you're counting on investment income, just remember, volatility isn't going away. Kind of like bell-bottom jeans. Who is it? Lainey Wilson has brought them back to country music. All right, bonds can bounce around too. Rate cuts can send some bond prices higher, but new buyers will face lower yields. Fixed income folks, well, keep an eye on what your next CD or bond really pays out after the dust settles. So who wins, who loses, and what should you do next, if anything? Remember Pac-Man? Sometimes you win big, sometimes you get cornered. So here's the quick rundown on that. The winners will be people with variable rate debt, those looking to buy a house or car, and investors leaning towards stocks if the market keeps rallying. The losers, well, if you're just a saver and you're hoping for juicy interest, no, not going to happen. Folks on fixed incomes who rely on inflation-beating savings rates, and anyone needing more income from bonds or CDs. And if you're just on the fence, Retirees who want both safety and yield will need to mix and match, like your sock drawer. Maybe ladder CDs, reconsider bond durations, or keep some dry powder, as they say on the business channels, extra money around for when rates swing back up. All right, here's some steps you can take, 3 steps to take before the Fed acts. Review your debts and your refi options. If you're holding adjustable rate loans or thinking about refinancing, now's the time to compare numbers. Don't wait for slippery when wet to hit the charts twice. Get a head start. Yeah, who wrote this again? Check your savings strategy. Think about spreading your savings across regular savings, CDs, and maybe even some I-bonds if you can. And don't lock up more cash than you have to. If rates drop, you'll want options, and you need cash for options, right? Cash is king, as they also say. Rebalance your investment portfolio. Yeah, not sure if you're leaning too heavily on stocks, bonds, or cash? Well, check it out. Take a cue from The Breakfast Club. Okay, there's a movie reference. Not only music, we got movies in here too. Diversify your click. And remember, chasing yield is great, but safety still matters, especially as retirement draws near. All right, the only constant from the Carter era to now, change. Change is inevitable. It's part of life. The Fed's likely September rate cut could mean more affordable borrowing and maybe a little juice in the stock market. Yeah, we'll go for that. But it also means leaner times for savers, if you're just a saver, and those relying on fixed income. So stay nimble, stay sharp, keep tabs on your accounts, and if you're unsure how these shifts hit your specific wallet, you could always reach out for some personal advice. Talk to a professional. Let's make sure your money stays as groovy as your favorite 80s cassette mixtape. Yeah, remember those? I think I have a few still around somewhere. All right, be good. And in the meantime, I'll see you in the next episode.